We start today's market talk. In markets, as in sport, chasing silver medals rarely ends well. As we have seen over the last week, silver had an exciting run. However, can this be a long-term investment needs to be seen very carefully because gold occupies a niche because central banks hold it. Silver has no such privilege. Its value floats purely on sentiment and industrial demand. Its gains and losses are magnified because it has no institutional cushion. Key issues which we need to analyze first, US sanctions on two of Russia's biggest energy giants. How will it impact India? This is seen as a major escalation targeting the heart of Russia's revenue. Sanctions have been dropped amid low crude prices and market surplus. Now, the only thing we have to see is how they are enforced. There would be secondary sanctions on foreign institutions like banks and refineries dealing with Rosneft and Lukoil when buying the Russian oil. So, how it will impact? Firstly, Russia. It will degrade its ability to fund the war. For oil market, Brent crude jumped 5%, but a forecasted global oil surplus will provide a cushion. So it has reached that 65, $66. After that, we'll have to see how good the sanctions are enforced. Saudi Arabia and UAE will be asked to compensate for the drop in the supply. So we have to see what is their reaction also. For India, Russian crude is 35% of the import. So India will have to find alternatives. And the cost of purchasing crude is likely to go up. So it will impact the margins of the refineries. For China, it has paused seabound purchases but can lean on pipeline supply from Russia. So their response in view of the talks between Xi and Trump this week will have to also be seen. So the discount is gone and the compliance risk has increased. In case India is not buying the Russian oil, then India should ask US to remove the 25% punitive tariffs, at least. So the second point is, will the trade deal with the US go through? The markets rallied this week on hope that a trade deal with the US is around the corner. There are also hopes of return of FPIs. Now, India is hoping for tariffs to come down to below 20% on par with Vietnam and Bangladesh, its main competitors. Focus of discussions at present in is on energy and agricultural market access. So we have to see what is the incremental news on this aspect. Now, what next for gold and silver? I'll show you with respect to charts. Gold prices pulled back from recent highs. This is a natural correction because because it had moved up too fast, too quickly. But long-term bullish bias in is intact. Geopolitical tensions and de-dollarization by central banks provide a strong fundamental flaw. For silver, it is exhibiting high volatility post last rally and it has fallen much more than gold. But one has to be careful because the bullish narrative is still maintained. So one has to be trading it with caution. Now coming to FI/DI data, if you see here, the FIs are net short of 1.07 lakh positions in index futures, but they have covered their shorts. So these positions have come down. In index options, they have bought calls and they have bought puts. So net they remain mildly bearish. In terms of pros, they have they are short on index futures and they have bought calls and they have bought puts also. So net they are mildly bearish but not much as such. So they are generally neutral. Clients, you see here, they are long on index futures. So they have bought 80 or 1000 odd long contracts on index futures. They have sold calls and majorly on Friday they have sold calls on index and though they have sold puts also. So if you see net net, the clients are mildly bullish. So the net position as such is FIs are mildly bearish, pros neutral, and clients are mildly bullish. So let's see how it plays out from here. In terms of data for the full month or this contract, so from 1.48 lakh short positions in index futures, the short positions of FI increased to 1.94 and then has come down to around 1.07 lakh. Now, how they move from here depends as to with the expiries now, which is monthly expiry, which is on Tuesday, and Bank Nifty expiry on Thursday. So they are expected to cover their short position, but generally the trend is that on expiry they cover their short positions and then they increase their short positions as the month progresses. Coming to the US, uh, investors in the US were comforted when Trump said he will meet Xi this week. He also ended though trade talks with the Canada. US stocks climbed to fresh all-time high following September's benign inflation numbers with technology and banks being the best performers. CPI print reinforced expectation of Fed 25 point rate cut next week. So if you see the US bond yields, predictably they are coming down. They come down to 4 level and may head lower. The dollar index was generally flat, didn't move much, is expected to come down. It was higher because the yen has declined. Brent crude moved up roughly 7% based on the sanctions on Russia, but now it is halting at the resistance of 20 EMA. So we'll have to see what happens. Can it go trade beyond the 66 level? Gold halted its rally. It had gone up to around 4,400 odd levels. From there, it has come down to the rising trend line support. Now, if will it take support or come down and test that 4,000 or below level, we'll have to see. Silver has broken through the trend line, and in case there is more sell off, it may head and test this 42 or 20, 42.27, 20 EMA level on the weekly charts. Copper remains neutral, nothing much, but it is above the long time resistance. So till the time it is above this, it remains bullish. Bitcoin was up slightly based on the news that Trump has pardoned some influencer who was dealing with cryptos. So it went up. And also on the good news related to the rate cuts in the US. S&P 500 made a fresh high of around 6,800. Uh, Nasdaq also was up 2%, and a lot of IT results are there next week. So we'll have to see how it moves, but it has reached the upper level of the rising trend line. Dow made another high, 47,000. So it is above that, was up 2%. So US markets remain bullish. India VIX was generally declined around 1%. So it is in a neutral zone. It should have declined more, but there is a lot of uncertainty with respect to trade deals, so it is remaining higher. Now, in terms of Nifty 50, uh, you see there is a most significant development during the week was our attempt to extend the breakout above the declining trend line that originated from the 2024 high. So it was a clear breakout took place. So that is positive. Structure is showing improving momentum as the RSI is moving up. It is at 61.6, so that is neutral. Now, confirmation of this breakout will be crucial for follow through. In terms of on the weekly chart, the close is just below the upper Bollinger Band or weekly chart on the weekly charts. A breakout attempt in the coming week may start on a cautiously optimistic note and above 20, 25,850, 25,900, 26,100 and 220 is possible. Support is at 25,600 to 25,400. On the daily charts, if you see, it broke out above this 25,630 odd levels, and now that level should provide a support. Uh, it failed, but two red candles on 2 days We'll have to see whether it can bounce from here or take support here. On the hourly charts, if you see here, there was a gap here, which has been covered. Now the next level of support would be around 25,400, where there was another gap on its journey up. So it may come down, or for strength, it has to move above this 25,820 levels, which is 20 EMA on the hourly charts. So we'll have to see what happens. RSI is neutral. Nifty Bank is poised at the breakout point. So we'll have to see what happens from here. It was just flat last week. Nifty Bank on the daily charts, if you see from the high it made to 58,800, 58,500, it came down and has tested the breakout point. So next week action depends on the future action from here. IT is trying to break out above this declining trend line on the weekly chart. So we'll have to see how the price action and the news are going to take place, because the news may be good on tariff front and other issues, but the earnings are not really supporting. Nifty Metals has broken out. It is above the all-time high. So this is one segment which is doing well. Autos consolidated, then tried to move up but sold off from there. So I think the consumption theme is now getting tired. Pharma also tried to break out but then made a doji kind of thing. So it is also stuck. Defense also didn't, despite positive news on Defense Acquisition Council, didn't really move up. So it is also stuck here. Midcaps were flat for the week. So just negative 0.03. So waiting for a trigger. Similarly with small caps, they were up 0.72. Again, not moving up and not coming down. In terms of last stocks, HDFC Bank, it tested the previous high, all-time high of 1,020, then retraced, and may now, based if it breaks 1,000 odd level decisively, then it will test the supports at 970 and 980. It has come down on large volumes, so one has to be careful. It had become slightly overbought. Reliance, it's an interesting chart. It went up on the news of likely trade deal, then corrected once they said that they will not buy the Russian oil. So that will impact their margins. And then on Friday, once there was a statement from the Commerce Minister that India will not stop buying kind of Russian oil, etc., or India will not bow to pressure and all that. So the Reliance stock moved up. So this stock will move on news. Support is at around 1400 level. So be careful with this one. Infosys took support on this demand zone at around 1400, moved up on the news that the founders are not participating in the buyback, but that may be more because of tax issue and then any benevolence for retail on their part. Now I'll cover two stocks. The first is Avanti Feeds. It's a leading manufacturer of shrimp feeds with a capacity of 775,000 metric tons, and it processes and exports a capacity of 29,000 metric ton of shrimps. It is addressing global trade risk by expanding now into non-US markets such as Japan, EU, and Middle East, while also encouraging domestic shrimp consumption. In Q1 FY26, exports accounted for approximately 23% of the revenue, with North America contributing around 78% of that share. So it will take some effort to shift the exports from US to other parts of the world. US imposed a 50% tariff on Indian shrimp exports effective August 25, in addition to the existing 5.77% CVD, which is countervailing duty, which is expected to impact H2 FY26 exports. Countervailing duties of 5.77% has been imposed due to anti-dumping on frozen warm water shrimp. This has been put on US, on all exporters to the US and not only India. Shrimp processing revenue continued to show robust growth, increased by 59% year on year in Q1 FY26. This is a smaller part of the business, while shrimp feeds is a bigger part. This was driven by strong volume growth of 52%, higher average selling price realization, and favorable foreign exchange rates. EBITDA margin declined to 9% in Q1 FY26 from 15% for the shrimp processing business, primarily due to countervailing duty and higher raw material prices in Q1 FY26. It is now trying to expand into pet food portfolio with a new cat and dog food products under the Avanti First brand. Distribution now covers 60% of India with e-commerce and quick commerce launches planned in the coming months. Seeing the quarterly results, to see the shrimp feed volumes and revenues decline, while shrimp processing volume and the revenues were up 58%. The cost of goods sold came down, so that helped the margins. So EBIT was up 37% for the quarter year on year and up 17% for the over quarter and quarter. PBT was up 38% and profit after tax was up 35% while EPS moved up by 39%. So this was good. Strong volume growth in shrimp processing and export business. So processed shrimp sales percentage by regions. So if you see the major sales are now 78% is to North America, that is US, and smaller to Asia and Europe. And this trend is now enforced over the last few uh, years now that the sale to the US is the major component of the shrimp sales. Shrimp feed revenue is cyclical, so Q1 it does better. So revenues are moving up and the growth is decent. EBITDA and EBITDA margins are also moving up, and PAT margins are also moving, and PAT percentage and EBITDA percentage is also improving. Processed shrimp revenues have improved and are on the upward trajectory. Uh, Moved up roughly 6% year on year growth, that is. EBITDA and EBITDA growth, EBITDA has margins have come down and EBITDA has come down because of the countervailing duty of around 5.77%. Similarly, because of that, the PAT and PAT percentage came down, and PAT percentage and EBITDA also moved down. So if you see their operational highlights, uh, the production of shrimp feed and shrimp processing is moving up, and that is a positive trend, both year on year and Q on Q. Sales have improved. Uh, Revenues of shrimp feed have improved, and margins have are moving higher from around single digit. They have become now 18-19%. Similarly, shrimp processing revenues are increasing, though margins have come down because of countervailing duty from around 15%. They have come down to below 10. So, but the consolidated revenues and margins are improving because shrimp feed is the major part of the business. In terms of growth, uh, single digit growth is expected over the next 2 years, and profit is also not expected to go up much. And they will have a EPS of around 39 to 40 in FY26, and FY27 we'll have to see what happens. So EBITDA margins are improving. EV to sales is coming down, so the valuations are becoming more reasonable, and the PE has also come down. So at in the present price at around 40 rupees FY26 likely EPS, it is at around 17 times. So we'll have to follow the earnings and the news flow with respect to this stock very carefully. So based on the possible trade deal with the US, the stock went up to 950 in May, April. But subsequently, after the noise on the trade deals and the sanctions imposed, it has came down to support at around 625 odd levels. So With the worst of tariff news, and we'll have to see this quarter's results also. We'll have to see, but mm, as the earnings growth and the margin growth is doubtful over the next few years, every rise is an opportunity to exit the stock because will be very vulnerable to the tariffs and competition and the margins. Next stock is Angel One. It's a full stack fintech platform. It is involved in broking, wealth management, asset management, mutual funds, credit, fixed deposits, insurance, etc. Uh, Q2 FY26 net revenue growth was lower, uh, as below the expectations, despite companies' countermeasures, because they were insufficient to offset the drag due to adverse market conditions and unfavorable regulatory developments. It witnessed 8% Q-on-Q increase in F&O broking revenue, led by 7% increase in average daily F&O orders. Margin trading facility book rebounded 26% Q-on-Q. Broking industry generally takes 6 to 12 months to adjust to a new normal post material regulatory changes. So right now the market is waiting for what is the new regulatory uh, instructions which come with respect to F&O. Some of the newer revenue pools they are diversifying into distribution and wealth management will begin maturing over the next few years. Expect a moderate pickup in revenue growth and consequently profitability metrics. So if you see their normalized financial performance, which they put in their investor presentation, the broking revenues have declined significantly and interest income has improved. So overall gross revenue uh, X ancillary transaction income is still down 14% year on year, though it has improved Q on Q. After adjusting for the ancillary transaction income, total gross revenue has declined 14% year on year. Uh, in Q1, they had an IPL expense of 111.7 crore. So excluding that, the revenue is up. Sorry, the EBITDAT, EBITDA, uh, this is EBITDA less interest, is up 6% Q on Q and down 33% year on year. So normalized PAT has declined around 37% uh, year on year and is up around 10% Q on Q. So they have improved their performance Q on Q, but have declined significantly year on year. So if you see their Q2 performance, 46% of the revenues are from brokerage, F&O and brokerage commodity is 6%. Interest from MTF is 32%. So these two are the significant part of the income. Rest, they are trying improving their client base, client acquisition is okay. Asset under custody have declined a bit. So business is under transition right now. Revenue generating orders have plummeted. So they have plateaued. And the contribution, which is the highest in terms of margin from net broking, has declined. And the contribution from MTF, which is net interest income, has gone up. Rising client funding book, but fewer clients availing MTF facility. So one has to be careful because though the average client book has gone up to around 5,300 crore, but the clients availing MTF has declined significantly. Now come down to around 30 lakhs. So which means that there is a 3x increase in per client exposure to MTF, so which increases the risk. And the client exposure to MTF is also moves with the market sentiment. So when the market was up in Q1 FY25 and Q2 FY25, the MTF positions per client were also higher. They declined and now they are moving up. So this becomes a kind of a cyclical business which is related to the market performance. Now, in terms of business, they have improved their F&O turnover market share. Cash turnover market share has also improved. It had dipped, but now it is improving. Commodity turnover market share is improving significantly, and overall equity market share is now, after the dip in FY24 and 25, is improving. F&O orders have declined significantly. Similarly, cash orders, though commodity orders have improved, total orders have declined significantly, so that will affect their margins and revenues. So, in terms of income statement, they're expected to do around 4,000 odd crore in FY26. So, there will be a decline from net revenue from FY25. EBITDA margins are coming down. Uh, PAT growth is negative. These guys are expecting around 1,038 crore of PAT, which looks difficult because these guys have done even adjusted normalized uh, profit is also just 400 crore. So doing this will be difficult, 1,000 odd crore. And then EPS of 115 for this year looks slightly difficult right now. I think it will be closer to 100 or below that. EBITDA margins have declined. ROE is declining. It is expected to move up, but we'll have to see that. And uh, EPS per share is also declining. So we'll have to see that. So in my opinion, it should do around 100 odd EPS in FY26. Considering that the decent price for this stock should be around 2,000. Now, it took support at 2,100. The price has been declining because of this negative news and lower income. It has broken out based on the positive news with respect to FNO, which the regulator has come out with, and now it is facing resistance at the 200 EMA at around 2540. So, based now, the performance from here will move on incremental news on related to FNO. So, right now, this stock is expensive and one should be very careful. So, all up move should be used to exit this stock. I have finished. We will take questions now.